If you stay with the same lender, you can
Okay.
call them as long as it totals the variables are usually a 5-year term. So if you have a 5-year, say you've had it for a year, you can call the lender and say, what would you offer me on a 4-year right now? And they can give you a 4 or 5-year rate, and then you can flip it into that with no penalty and stay with them, and you early renew it into a new fixed rate.
Well, welcome back to the Bamford & Co. podcast. I'm here with one of our many mortgage brokers that we've had some great success with, is Tawny Bley. Tawny, thanks for coming on. Would you mind giving us a little bit of a breakdown of your background in the mortgage industry?
So I've been in the mortgage biz for over 20 years now, been in the banking, and I've kind of been on every side of it. Opened a mortgage brokerage called oneSt Mortgage just about 9 years ago now, and have an office here and one in Edmonton.
Yeah. Learned something new. I didn't even know about the Edmonton one.
Yeah.
That's awesome. So mortgage is your specialty. And I know that we've had some good rate announcements from the Bank of Canada. Where do you see things going, say, in the next, I think we have 2 more announcements for this year.
October and December.
No, October to December. And then also we got a couple for next year. Where do you kind of see things leading? Are they going to continue to decrease of where everybody's hoping?
Yes, all arrows are pointing down.
Okay.
The economists, there's a few economists of the big banks that have come out and said that there's going to be some bigger cuts, hopefully December and beginning of the year, possibly 0.5% each of those. So if that happens, October is a quarter and a couple of halves, that's over 1% that the clients could hopefully see, which is going to come in line with fixed rates. So a lot of people are leaning towards variable again because it could be a win.
Right. Okay. So historically, from my experience, and I'm not the specialist on anything, but we've been through 4 elections, and every single time that we've actually seen a federal election come around, is that we've seen interest rates drop. So I do agree with you.
Yeah.
And, it's not that my opinion really matters on that one, but
Yeah.
now what kind of, you mentioned a little bit about the variable rates and then the fixed. I know a lot of people are still having a problem of deciding, like what's the average rate that you're seeing right now for a fixed?
If you're doing an insured mortgage with your less than 20 down, I've got as low as like 4.39 right now.
Okay. And then variable, you're looking at
4.29 even.
Okay.
But variable is going to be around 5.45 right now.
Okay.
Prime is at 6.45. We can get up to about 1% off of that. So when you take a variable, what you do is you lock in a discount.
Right.
So Prime's going to do its thing, and then you always get your discount off of that for the whole term.
Okay.
So it's starting at 5.45, a fixed, 4.29, depending if you want a 5-year, and yeah, so like if it drops a whole percent in a quarter or whatever, now you're already at what you would have
Good for the fixed.
what you would have locked in at, and then if the rates keep dropping, those penalties get large.
Right.
And that's where people are up against in the next few years. If you're taking a fixed, you could be up against a whole penalty if you're buying new, refinancing, whatever.
Right. Now on the variable side, usually those penalties aren't quite as much though, correct?
Correct. Variable is always 3 months interest, period.
Okay.
So banks have 2 different terms. They can either do 3 months interest on the contract rate if with your discount, or just 3 months on prime rate. So yes, and that's it. You walk away 3 months and that's it.
Right. So from what I'm hearing is that you might be saying if you're buying a house today, you might be looking at maybe going in with a variable, working with, and planning to maybe take on a fixed rate maybe in the next 2 years or year and a half or year or whatever it is.
You just have more options with the variable. Not that I'm saying it's the right decision, because some people are not variable rate mortgage holders. They just can't take the risk. They don't even qualify, some of them, because you're qualifying at a higher rate from the beginning.
Right, okay.
So if you're taking a fixed, you get to qualify at a lower rate. And if you're not going to sleep at night and knowing what Prime's doing, then that's not the mortgage for you. But you do have more opportunity with it, because as the variable rate starts going down, the fixed may or may not follow. But if it does, you can always flip your variable into a fixed rate at any time during your term. So
and do you still have a penalty for that?
No. If you stay with the same lender, you can call them as long as it totals the variables are usually a 5-year term. So if you have a 5-year, say you've had it for a year, you can call the lender and say, what would you offer me on a 4-year right now? And they can give you a 4 or 5-year rate, and then you can flip it into that with no penalty and stay with them, and you early renew it into a new fixed rate.
That's awesome. I even learned something
I
today
know.
too. That's great.
I know. Yeah.
That's great. So the other thing is that I wanted to touch, but I think that's a pretty good example of variable and fixed,
Yeah.
and kind of where things are leading now, is that I know rental properties are a big concern for people just getting into the market and having that legal suite in there.
Yes.
Can you give me a little bit of breakdown? Because I was really intrigued to hear what the pre-approval rates would be for somebody that was,
Yeah.
maybe say, let's use a reference point of 400,000. That's
Yeah, I kind of did a scenario at 100 grand of income. Let's say household
Okay.
income 100 grand. You're going to qualify for approximately 420 purchase price
Okay.
with minimum down payment. So, and I use just 1% for property taxes. So you're going to be somewhere in that vicinity. Now put a rental suite in a property with 100 grand of household income,
Okay.
and now we can. Some of the lenders that we work with will remove the taxes and heat off of the equation and let you use 100% of the rental income. So say it's $1,200 for a 2-bedroom suite. Now that person can qualify for about $550 purchase
wow.
price.
So $130,000 more.
Around, yeah.
And is
somewhere in
that
that
just with legal suites, or is that non-conforming as well too?
Some of the insurance companies, depends. They don't like the word illegal, so as a realtor, don't ever put illegal suite in anything. Non-conforming is what they like to see. Depends on the deal and
Right.
the insurance company. I have been able to use 100% on a non-conforming if I can prove that it is its own suite with its own entrance and it's all self-contained.
Right.
So it's kind of a gray area. Yes, do they want to see the legal? Yes, they want to that
Right.
it wants to be legal, but
For the sure bet, we'd need to kind of get that legal.
yes,
that
I
term
have
in
got
there,
them
hey?
approved.
Okay.
If I can prove, yes, it's self-contained, it has its own identity, then
Okay.
some of the insurers will use the whole 100%.
Ah, that's great.
Yeah.
That's it's interesting just because we definitely need the extra housing out there and the extra suites out there. So that is nice to be able to see that people can be approved for more
Yes.
when they are taking on that responsibility for that extra suite.
Yeah.
Okay. Awesome. So we do have a couple more things. I did want to mention, you mentioned we sat down last week about one big thing that you see the majority of people that have a hard time getting pre-approved for. What would the one big purchase that most people have does really affects their pre-approval? Would it be vehicles? Would it
Vehicles. Why do you need a $1,200 vehicle payment? Because that's a mortgage payment.
It
But
is.
yes, honestly, it's the consumer debt.
Right.
And I mean, there are some solutions. I do have options for a cashback mortgage where the lender will increase your rate slightly, depending how much cashback you would want. There's like 1%, 2%, 3% of the mortgage amount. And sometimes that 3%, maybe that pays off their car loan. Maybe that pays off the credit card and gets their debt ratio in line to where they need to be. But yeah, consumer debt is a problem.
I bet. Well, this has been great, Tawny. Very
Yeah.
educational for our viewers out there. And if you're ever looking for any mortgage advice, that Tawny Bley with oneSt Mortgage is a good place to start. So thanks again for having.
Thanks for having me.
Yeah, perfect.
Awesome.
We'll have to do it again.
Thanks.